Hello traders, how are you doing? In this video, let's just talk about how to grow the small account. So when everybody actually who has started in the forex market, I know 90% have started the small. And if you can just be a witness to me, is that growing a small account is actually more challenging. And one of the stories that I normally hear from traders telling me is that I was able to raise my account from a small account, but at the end of it, I actually ended up blowing that account, which means there's challenges when it comes to even growing and maintaining that momentum. Let's just talk about that in this video to make sure that you actually stay in that you can actually grow that small account and you can maintain that amount of money that you'll be making from that account. Ensure that you subscribe, and you can also follow me on our social media platform at Dantech. So number one, when you're growing small account or you are starting the forex trading, you actually must have a plan. And when it comes to planning, is that maybe the amount of money that you've deposited, that is $100, $50 that you have in your account, you must have a plan to know that this amount of money, I want to grow it to be either $5,000, $10,000. You can't just say I just want to grow a small account, because if you just grow that small account from $100 to $101, you have already grown that account. So you must have a plan and the target that you just have to know that in the next 30 days or 2 months, I want this account to be in this step. And that is actually what you have. You must have the overall plan that includes risk management, everything that actually includes risk management, and everything has to be written to make sure that you actually follow that, because failure to plan is actually planning to fail. That is what you actually have to know. Let's just share 5 tips, and before even on that, we'll be sharing also the don't and does that you actually have to do to make sure that you don't fall in it. And more so, we just be talking about things to avoid mostly. Okay, so number one, the first thing that you actually have to be doing is to make sure that you take the quality trend. So if you are trending the forex market, you actually have to make sure that you avoid unnecessary trends that you are actually trending into the market. You actually must have that plan that you actually have to know, I have to avoid this trend, I have to do this trend based on the probability that you've been getting from the calculations that you are actually doing. So you make sure that you are taking quality trend on not just entering and going to the trade and taking any trend. Number two is to make sure that you have a strategy that is aligning to that. You can't just take a strategy because you have had this strategy is just important, this strategy is working and all that, and then you start now implementing that strategy to that $10. So the advice to this is to make sure that before even you go to doing or raising that $100 or that amount of money you want to raise to the big account, the first thing that you have to do is to make sure that you go to the demo account. So if you go to the demo account and you reset it to be $100, and then you can start now practicing from that, and you try to raise that amount of money maybe in 3 times, or maybe before you come to reality now, and then you can now practice on that, put the strategy and find the strategy that actually works for that amount of money before coming now to practice on the account. Because the strategy that I can put to $1,000 account, maybe it can fail to work on $100. So number two is to make sure that grow that account and get out of that mess. So you know there's actually more than just last lies to the small account. So number three, what I'll be doing is to make sure that I grow that account. So the first thing is I'll make sure I avoid like withdrawing the amount of money that I get from there. You know, remember where we started by saying about the plan. Okay, so is make sure that you have that plan, and the reason we're having that plan is to make sure that we don't withdraw this amount of money. So in case maybe we have something or we need money to get something, we don't touch this amount of money, because trading with a small amount put at high risk. So that's why it is very important now to start planning on how to grow that amount of money. And number 4 is actually called risk management, and always the number 3 is called the risk management. Is called the leverage. The leverage is actually very important. The reason we are talking about leverage in this case is because the more, if you select, for example, 1 is equal to 1, it's actually not going to serve you. Even if you have $100, you can't even open a position. If you have $400, you can't open your position if you select 1-to-1. Most of the leverage that I normally recommend is to select a leverage is like 1 to 300 or 400, that is actually neutral, or maybe as a center like 1 to 200, but it depends with the capital that you have. If you have very small amount of money, then I recommend that you use 1 to 400. But if you have good risk management, I think the leverage here is not going to be that important. And number 4 is called risk reward ratio. So risk reward ratio is actually very important, because if you are going to be risking a lot of money to get a small amount of money, I think that is going to be very dangerous. So anytime you are going to be risking, make sure that you are risking at least with a risk reward ratio of at least 1 to 2, to make sure that anytime maybe you are losing, because you're not going to be winning all the trends. So make sure that anytime you lose one trend, the next trade that you take is actually going to supplement the one you actually lost the previous one. There are a lot of practices that you can actually put on this to ensure that you stay profitable when it comes to the forex market. And the number 5 that I'm going to be sharing here is called the choosing of the broker. Make sure that you choose the broker that actually have called spread, because spread are actually very important when it comes to the trading. And if you select a broker that normally provide high spreads, then it means when you have small account, it's actually going to cost you to open multiple trades, and at the end of it, you actually have incurred a lot of money. And remember, you actually have small amount of money, so you select a broker that has something that is nice leverage that you actually favor you as a new trade. Now, things that you actually don't have to do now, these are don't, and you actually have to avoid them. Number 1, avoid trading midnight. The reason I actually encourage that you don't trade at midnight is because most of the spread normally in home brokers shoot high, and that is actually can cost you a lot of money. You can be having small amount of money there, and you just enter your money, and then all your money just get a loss. You actually go negative a lot. So you make sure that you trade when at least the market is volatile, the market is moving during the daytime. You can trade if you are in Africa, you can trade London session. Also you can trade those are the time the market is normally very volatile and good, and the spread are actually favorable. And number 2 is to make sure that you don't trade during the news, because if you're trading news, you know what normally happens to news is that the news are sometimes and most of the time surprising. So you may get a lot of surprises there, and that is something that we actually need to avoid here. A lot of surprises when it comes now to this news. And number 4 on this don't is make sure that you actually don't analyze and enter on the highest time frame. If you are analyzing the market, you can't enter on one time frame because you have small amount of money. A small move that and they kind of can actually make can actually even blow your account. So make sure when you analyze that you use top-down analysis and you go to enter on the smallest time frame. The last one on the don't is make sure that you don't trade a signal. Don't get any signal out there and just enter and put to account. So what you can do is make sure that the way we said earlier, develop your own strategy, test it, and come to it, and don't be testing to that. And make sure that you keep that and don't be distracted about that. Keep going on using that strategy until you achieve your goal. And I think the reason so many people actually get and diverted and lose account of growing it is because when they are starting, they are using the strategy they started with, they are following all their guideline when they are starting, but when they actually reach at the middle, then they forget everything they were laying down. They forget all the policies, they forget about their plan, they forget about their goal, and then they just start inviting other alien strategies, they start inviting other things into their plan, and then they actually mess everything up. I think if you start well and you put everything in the plan and you stick to the plan until the end, you can actually achieve that in a very, very big way. So if you love this video, make sure that you can follow me on here. If you have any question as well, I'm going to be posting another thing that you actually have to observe on the comment section. Make sure that you reach there and let me just know where you are watching me. Let me just, if you have any question, you can leave it also on the comment section. Let's keep interacting, and also on all social media platform as Dan Tech, TikTok, Instagram, and also social media platform. I will see you next time. Keep watching.